Alright, so we are looking at the stock picks for the upcoming week, December 7, 2015. We have a theme this week, as we do probably half the weeks. This theme is an ETF theme. If you don't know, an ETF is an exchange traded fund. Four of these stocks are actually ETFs. So what you're basically doing is you are buying an index that represents something about the market um, at a bigger scale than does an individual stock. So I'll explain these as we go. The first one is EFZ. We're going to be using stockcharts.com as always because it's very easy to use. All you need to do is I'm not even going to bother switching with moving averages. I'm just going to change the indicators. We want the runes, we want the Chaikin oscillator, and we want the slow stochastics. If you've seen my other stock pick videos, you know these are my three favorite indicators, and these are what we're going to be using. Now, here's what we got. We got a very gappy stock. You can see there's gaps between the candlesticks pretty much almost every day. And you'll see these high volume days that bring up spikes. We want exposure to those, but we want smart exposure to those. And what we are going to be doing is playing these as swing trades. So what's important with EFZ is mainly this slow stochastic buying signal that we haven't had for over a month. With the black line coming above the red line and above the 30 line, this means that the stock was recently oversold and it's probably going to start moving upward. Let's change those moving averages to be more close term. I'm going to change them to 20 and 30. Alright, so you can see how the blue moving average has crossed over the red moving average out here, which means that we're starting to gain a little bit of upward momentum. Now the most recent candlestick has been a drop. So even though this area gap just filled, and technically just using area gaps, we would expect that to fill, but we don't know about the momentum based on that area gap. However, we have many gaps above us, and we do have a lot of gaps below us as well. So this is not really a gap trade, and it's not exactly my cup of tea. However, because it's an EFZ, sorry, it's an ETF, it has a meaning behind it. And a lot of the time when you're trading ETFs, you're going to want to look at the fundamentals. Now this particular ETF is for people who are bearish about developed economies. And if you're bearish about developed economies, this is a good long-term hold and not just a good swing trade. So even though you could say we have three signals. We've got the moving averages showing a new momentum upward. We have slow stochastics showing a oversold signal. And we have a Chaikin oscillator showing actually a reverse signal that people are taking their money out of this fund. But that also means people are probably taking their money out of the stock market as a whole. On Friday, there were a huge amount of gaps down in stock. If you look at all these gaps we had on Friday, down gaps. But look at the up gaps. And compare that with the down gaps. We only have a handful of up gaps, but we have a huge amount of down gaps. So the momentum of the market, which I use gaps to determine what's happening with the market on a whole. The momentum of the market is down. People are taking money out of stocks, looking for safer investments because they are unsure of the current situation in Europe, in Russia, in America, in developed countries, essentially. So I'm telling you that you should probably be bearish on the developed economies of the world. And at this time, now that we're at a relative low, you should probably get into EFC and hold on to this. Now this could be a good swing trade because of what's going to happen in the coming weeks. And it's a decent swing trade because we got two bullish indicators versus one semi-bearish indicator. As I just explained, this can be interpreted as a bullish indicator because people are taking their money out of the stock market. So we've got some good signs here. That's a good position trade, swing trade, and even long-term holding, EFC. If it wasn't so goddamn low in volume, I would probably hold on to this myself. But I play options, and if I play stock at all, I use synthetic positions. You can look them up if you're familiar with them. But it's basically using stock options to simulate stock at a much lower price. And because EFZ's options are either non-existent or so low that I forgot about them in terms of interest, open interest, I'm just not going to be playing this one, unfortunately. But I do recommend that you guys play this one, and even for the long term. Now, the only disadvantage of this is that EFC doesn't really go up that much. It could go up from 32 to 36. That's pretty high in terms of percentage, but we don't really see huge spikes like we do with other stocks. So let's move on to the next ETF, which is actually an ETN. This, well, I'm going to call it ETF anyway. This simulates the price of gold. Now, as I just said, people are taking their money out of the stock market and looking for safer places to put it. You can see the Chaikin oscillator is way up and finally in positive territory for gold, which means people are looking for safer investments and they're probably buying gold. Unfortunately, that's probably a pretty big mistake because gold is at the end. It's still a bubble that's deflating. The price momentum is still downward. You can see the moving averages with the red one above the blue one indicating that the momentum is downward. The red rune line is way up here. The green rune line is way down there. That's still a very bullish signal. The only bearish, that was still a very bearish signal. But we do have a bullish signal which says that this ETF is undersold. It's saying that gold is undersold, and oversold. I'm tripping on my words right now. I don't agree with that. And if you look at the volume on Friday, it's not particularly high, especially compared to the past. And even if you look at these really high volume days, not a lot happens the day after. Like it does fall a bit or it does move a bit. But this is a gap, more importantly, and this is exactly my cup of tea. This is my forte, gap trades. Now this gap is interesting. This is a double white up gap, and a double white up gap is typically going to be followed by a immediate reversal. So what I would do, and actually what I did, is I bought a put option. In other words, I shorted GLD. So I shorted this. So this is not a buy trade. This is a short trade. While gold is at a relative high, it really is at a relative high because of fear. The fact is, gold over the coming months is going to continue falling. That's mainly because, well, first of all, it's because the gold bubble is still deflating, but it's also because the Fed, the federal, the FOMC, it's a group that meets and determines how the central bank should determine what the interest rates are for other banks. Now, what's going to happen is we have predictions right now, and they are 75% and above. What's going to happen is that those interest rates are going to rise. And as those interest rates rise, gold must fall. The reason it must fall is because as interest rates rise, investments like bonds become more attractive. And because gold does not offer a yield, there's really no use on holding on to that when you can put your money into bonds. That's what a lot of people think. All right, maybe it's not true. Maybe you like gold. That's fine. But if gold rises, it's because of a huge problem in the economy. It's not because gold is on the rise and investors are liking it more. It's more, you should think of gold as right now it's overvalued because of fear alone. And the coming interest rate hikes will push gold down even more. There will be more downward pressure than there really is now on gold. And that's going to get you a lot of money if you short, and especially if you buy puts on GLD. Now, I bought a put the other day. As this was rising, I saw that gap. I thought the gap was going to fill during the day, so I was trying to do a day trade gap, but obviously that didn't go as planned. The gap didn't fill during the day, so I'm holding on to a put option at about 103. And I plan to continue holding on to that because I believe this gap will fill. So we've got a gap trade, we've got fundamentals being poor on gold, and we still have that downward momentum and Arun line indicators, even though these two indicators are opposites. So I'm going to say this is a gap play, a downward gap play, a bearish gap play, and it's a fundamental play. You still have time to short gold. Gold has been one of the easiest shorts for the past like year or two, and anybody shorting gold at this time would have been very lucky. Now, remember back in August when the market had a bit of a correction? Well, that's what shot gold up this high, and that would have been a great shorting opportunity. Now, we're seeing the same kind of thing down here as gold overall deflates. So we're seeing that same kind of thing. I don't know where we are. We might be at this candlestick. It might go up a bit, but statistically it should fall immediately after on Monday, starting Monday. Now that depends on how much fear there is in the market, but I think that the fear on Monday is probably going to be about the same or less than that of Friday, and the hype for gold is going to die down, and other people, especially institutional investors like hedge funds, are opening really big short positions on gold, and this is a great time for them to open stronger, more short positions on gold. So there's going to be even more downward pressure on gold in the future. So yes, if you have access to a margin account, buy put options or short gold. All right, let's move on to the next one, which is Russ. This is a bear bear ETF and 3 times leveraged. So if you are bearish on Russia, this is the ETF for you. Now I'm bearish on Russia because of the fundamentals and because of the technicals. Let's talk about the fundamentals. Let's talk about the fundamentals first, real quickly. So Russia and Turkey have gotten into a bit of a dispute, and they basically have each other by the neck, because either one can ruin the other's economy. They could shut off oil, and then one party is not making money anymore, the other party is not getting energy anymore. There's a lot of potential for huge economic collapse with this current situation. Now, I don't think anything's going to happen. I don't think Russia or Turkey are going to do anything stupid, but investors are preparing for that. And they're preparing for that by opening short positions on both the Russian and the Turkish economies. Now we're going to do the same thing. We're smart like them, and we want a short position on Russia, but we want to be safe, so we're to get into this 3 times leveraged ETF. It's safe because we're going to be taking a long position on a bear ETF, which means we have limited losses, but we can also gain a lot because it's 3 times leveraged. Now, you'll notice that the blue line, which had been under the red line in December, is now crossing above it. So we're getting that momentum, upward momentum. The Arun lines aren't telling us anything really interesting except for the fact that the red one has crossed under the 70 line, which is usually a bit of a bullish sign, because it basically means that those lows that we had before are quite far away from us now. As you can see, we're at 33 and the lows were at 25. In addition, we've got this black up doji candlestick, which statistically means that the stock's going to fall a bit to cover this gap. This gap will probably fill, and after it does fill, what will happen is the stock will move up. So you might not want to get into Russ RUSS on Monday. You might want to wait until this gap fills. It's really up to you. If you want to wait until the gap fills, that's fine. If you want to get in now and you don't really care about swing trading this, you want to get in for the long term or position trade, then just buy it on Monday. Now, like I said, people are taking money out of the stock market except for gold, so you're going to see a downward Chaikin oscillator. It's still above zero, so we're kind of safe. and the stochastics don't tell us really much anything at the moment. All right, so that's Russ. We're gonna move on to LBJ. This is a ETF on the Latin American market, which can be good and can be bad. I'm going to say we should be a bit bullish on the Latin America market because even though Brazil has some problems, Mexico is getting better and Argentina is getting much, much better. Now, that those two countries are obviously smaller parts of Latin America, but the fact that those two economies are growing can be a nice contrarian trade on LBJ when people have thought, Latin America is not living up to the potential and the stock has dropped to pretty much an all-time low. This is a nice time to buy in as we see Argentina's economy get really, really good. All right. You can see that people took a lot of their money out of this in the past couple weeks or so, and it's at a real bottom in terms of short versus long. There's a lot of short here, and buying cheap is really the opportunity we have here. You can see the stochastics are way under the 30 line with the black crossing above the red. That's our buying signal. A stronger buying signal is when the black actually crosses above the red and then above the 20 line. We don't see that yet, so you might want to wait for that, but I think we already have a pretty good buying signal on LBJ. And finally, we're going to look at just a normal stock, PX. This has nothing to do with our theme of ETFs. And this one is a bit interesting. So we have upward momentum because the blue line, the blue MA is above the red one. But those two, the difference between those two is closing. So the distance is closing. We also have a gap. This is a red candlestick followed by another red candlestick. That kind of gap. When you got that black down black, typically what happens is you hit a bottom and then it reverses, especially at this price. So this is an area gap that has yet to fill. We finally, on Friday, got a sign that there's going to be upward momentum for that gap to fill. This is really a gap play. And even though we just had a bearish signal, a selling signal, the gap statistics are so strong that I put my faith in the gaps more than anything else. So when I see a gap like this where it hasn't filled yet and statistically it should fill, and we see a white candlestick finally, this is a gap game plan kind of trade if you've taken that course of mine, and this is going to give us a nice well, not a huge profit margin, but it's going to be fast. It's going to close fast. We know where to exit our trade. We should exit around 112 if you want to be safe, or ride that a bit upward if you see an upward momentum there. As you can see, people are putting money into this stock while taking money out of all the other stocks in the stock market, practically all of them. So it's an interesting stock to watch. It might be a very good value stock if a market correction comes. And we got that same oversold signal. So this is likely going to come back pretty soon. I'm looking for it to hit its more recent high and then sell at that resistance point. But if you want to be safe about it, I would buy a call option and then sell when the stock hits 112. That'll make you about $150 per call option, which is pretty good. If you hold out until, I'll probably get a hold out until the tops of the candlesticks, these red ones here, not the shadows, but the tops, are hit at about 115, and then I'll probably sell my call option, and that'll give me maybe $400 to $500 profit on something that cost me only a few $100. Of course, that's more risky play, but that's what I'm looking at for this stock. And those are your ETFs right there. If you have any questions, leave them in the comment section below. Sorry for tripping over my own words. Subscribe and you will get a update every week when I put out a new weekly stock picks video.